Hello everyone, in this session we will be starting cash book. Now first we will see some theory part of cash book and then we will see one practical question of cash book. Now let us see what is cash book. Now earlier we have seen how to prepare journal, but we talked about that if the size of a business is very small, then it is possible to record each and every transaction in journal. But if the business is very big, then it is not humanly possible to record all those transactions in journal. So in that case, what big businesses they do is that they prepare cash book as well as some other special journals. Now we will see what are those journals. Now first book is cash book. Now in cash book we record all the cash transactions. That means if we receive any cash amount and if we pay any cash amount, those transactions will be recorded in cash book. Then all the other credit transactions, like if we look at all the transactions, we can divide them into two. That is, first is cash transactions and another is credit transactions. Now when we talk about cash transactions, those we will record in cash book, and those credit transactions we will again classify them and we will record on different types of books. Now first is purchase book. Now credit transactions, or we can say credit purchases of goods, will be recorded in purchase book. Then in sales book, what we will do is that we will record all the credit sales of goods. Then purchase return book or return outward book, in that we will record the transactions when we receive goods after when we purchase goods on credit, and if we return it back to the supplier, at that time we will record it in purchase return book. Remember, in purchase return book we will record only those transactions which are purchase return related to the credit purchase, not with the credit purchase cash purchase. Then next is sales return book or return inward book. When we sell goods on credit and if some of our customers return goods to us, then at that time we will record those in our sales return book. Then journal proper is the last type of subsidiary book, in which we record all the transactions which do not find place in the above subsidiary books. Like this in journal proper, it is used for recording the transactions which cannot be recorded in any of the above mentioned books. You will understand when we will solve practical question. Now instead of recording transactions in journal, what big institutions or big business they do is that they prepare 6 journals. As we discussed earlier, cash book, purchase book, sales book, purchase return book or return outward book, then sales return book or return inward book, and last, journal proper. Now there are some practical like advantages of subdivision of journal, and those things you can give it a reading and you will understand properly. Now let us see what is meant by cash book. Now as you already know, cash book is a book in which we record all the cash transactions, cash receipts and cash payment. It is nothing but a subsidiary book, and it is also known as a principal book. Now you have to understand this table or this box, that is difference between cash account and cash book. Questions have been asked from this part for at least 2 marks, 3 marks or 1 mark. Now cash account, it is nothing but it is an account in a ledger, but cash book is a separate book. Like when we record transaction in let's take example that there is one transaction given, means capital account. Let's take capital account. Now it is only an account, but cash book we create separate whole exercise book or whole book for maintaining cash book. Okay, then next is cash account is opened in the ledger and posting is done in this account from journal. Then in cash book, it is a book of original entry because we record all the cash transactions first of all in cash book, and then from there we transfer it to the ledger. Then cash account, in this transactions of cash are recorded in journal. It is necessary to open a cash account in ledger, means if you when we will prepare ledger, you will see there will be one account named as cash account. It is compulsory for every business to prepare cash account in ledger. But in cash book, when the transactions of cash are recorded in cash book, there is no necessity to open a cash account. In cash book, we don't open any cash account. Now, in cash account, it records only one aspect of a transaction, that is cash. But in cash book, we record both the aspects of transaction, means we record receipt as well as payment of cash. Now, you can give a reading to this topic, that is similarities of cash book with journal, then similarities of cash book with ledger, then advantages of maintaining a cash book. Then let's go to the next important topic, that is types of cash book, that we are going to actually deal practically in this chapter. Now, cash book, they are of 4 types. First one is single column cash book, that we will see in today's session how to prepare single column cash book. Then second type is double column cash book, in which we will have cash and discount columns, bank and discount columns, and cash and bank columns. This also we will see in practical question. The third type is triple column cash book, but this is not included in your syllabus, so we will just skip this one. And the last one is petty cash book. Now let us see some details or some rules regarding a single column cash book. Now this is the format of single column cash book. There will be total 10 columns. Both sides, they will have 5 columns each. First one will be date column, then next let us see cash book as 2 separate parts. Now let us discuss first about left hand side, that is debit side of cash book. In here we will first have date column, then particulars, that is receipts. That means if we receive any amount of cash, we will record it in here. Then we have voucher number, ledger folio number, and last amount number. Now in debit side, what you have to remember is that before writing any transaction, we will have to add 2. Then on the right hand side, we have credit side, and in here also first column will be date column, then second will be particulars or payments. That means if we have made any payment in cash, then we will record in here by writing by in front of all the transaction. Then we will have voucher number, ledger folio, and at last amount. Now let us see some information regarding this format or pro forma. First is date. Day, month, and year of the transaction will be recorded in this column. Then particulars, voucher number, ledger folio, amount. Now there are some points that we have to remember while preparing a cash book. The first one is cash book itself is a cash account also. As such, it is a real account. Means this cash book, we will treat it as a real account, since we have seen in traditional format that all the assets account are real account. As such, we know that cash account is also a real account, so we will record on the debit and credit side as same as rule following real account, that is debit what comes in. You can see debit what comes in means receive, means what is cash is coming inside the business, so we will record on debit side, and credit what goes out. That means while paying cash, it is going out from our business, so we will record in credit side. Then if opening balance of cash is given, it will be given in some questions. At that time, what you have to do is that it will be written on the debit side by writing to balance brought down. Means we had earlier balance of cash that we are bringing down in this new time. In this new cash book. So we will write to balance brought down and the amount that is given in the question. Then single column cash book makes no record of checks received and given. So for single column cash book, you have to particularly remember is that we don't record any transaction related with checks received or checks given. Then cash discount allowed and received also we don't record in cash book. For that we will pass journal entry, which is known as journal proper. Then there are some notes that you have to remember. Discount allowed, discount received, and cancellation of discount received or discount allowed will be recorded through journal proper. Journal proper is nothing but to pass journal entry. Then fourth point is when a cash book is maintained, cash account is not opened in the ledger. Now in whole over work of an accountant, they have to see is that if they have prepared separate cash book, then they will not create cash account in ledger. Then point number 5, when an entry is recorded in cash book, a corresponding entry is recorded in ledger. Means when we record an entry in cash book, at that time we have to pass an entry in ledger as well. And here an example is given. If 2000 are received from Gopal, the receipt or debit entry is passed in the cash book. Since we have received cash, we will record it in debit side of cash book, and in the ledger we will create Gopal's account, and there we will credit his account. Now after recording all the transactions in cash book, what we have to do is that we have to balance cash book and we have to find out carry forward. Cash book may be balanced daily, weekly or monthly depending on the need of the business. Normally it is balanced daily in order to tally the balance shown by the cash book with that of the actual amount of cash in the cash box. Now suppose if you are running a shop and if you have prepared cash book, what you will do is that you will tally it or you will balance it every day, so that the balance that is showing in your cash book is the actual amount of cash that you are having at your hand. But it is not practically correct in real life. It is just for the theoretical knowledge. Now we have to follow some rules, or we have to understand some points for balancing the cash. The receipts or the debit column will always be bigger than the payment side. That means we will receive more cash, or we will have more cash in our hand than payment. Then the difference will be written on the credit side as by balance carried down. Means the balancing figure, first we will tally or we will add all the payment side and that of the receipt side, and after that we will find out the difference between these two amounts. So the difference amount will be nothing but by balance brought down, which we will record on credit side by writing by balance carried down. This will make the total of the two sides equal. Just like in journal we have to we saw that both the debit and credit sides are equal. In similar manner in cash book also, by finding out balance carried down, we will get both the sides equal and total will be written in two columns opposite one another. The closing balances become opening balance of cash in hand at the beginning. Now when we find out by balance carried down, that balance carried down will become to balance brought down of next cash book. Okay, now one thing you have to always remember is that cash book always shows a debit balance. Now when you are calculating or during exam you are preparing cash book, and if you think if you have any doubt regarding whether your cash book is read correct or not, then you have to understand that your cash book will always show a debit balance. It should be noted that the total of the debit side of the cash book always exceeds the credit side. That means your receipt side will be more than your credit side. It is because a businessman cannot pay more cash than what he has got. If the money is paid by borrowing from someone, then it will be first recorded on the debit side, that is on the receipt side, and then from there only he will make any payment. And therefore you can conclude that cash book will always show a debit balance, or it will show nil balance, but it will not show any credit balance. Then there are some important notes regarding some transactions. Now transactions in which party name is not given, that time we will treat it as cash transactions. Then transactions in which party name is given, at that time we will treat it as credit transaction and we will not record it in our cash book. Then at last, transaction in which both party name as well as cash is given, then it will be treated as cash transaction and we will record it in our cash book. So basically it means that when you get question, then you have to see which transactions are cash transaction and which are credit transaction, and based on that you have to prepare your cash book. Now there are some cash discount allowed and all those things that we will see while solving the question, practical question. Okay, now let us see practical question. Now the question that I have picked is question number 3 of your practical question. Now 1, 2 will be for your practice. Okay, because 1 and 2 they are very easy and I have skipped those for your practice. Now let us see the question. Enter the following transactions in a single column cash book. That means first they are asking us to prepare a single column cash book, and you can see in the question they haven't mentioned the name of the business. So in our answer we will just write cash book in the heading. Okay, then let us see the format. Both the debit and credit side will be there. Then first column will be date, then particulars, that is received, voucher number, ledger folio, cash column, then date, particulars, payments, voucher number, ledger folio, and cash. Now since on February 1st they mentioned that Mr. Vipin commenced business with cash, that means he is bringing cash into the business, okay, worth of rupees 2 lakh. That means the business think from the business's point of view and see that while Mr. Vipin he started business with cash, that means business is receiving cash. So that means we will record it on debit side by writing to capital account rupees 2 lakh. Then next transaction is opened a bank account and deposited rupees 75,000. Now when we open bank and we took out cash from our business and we deposited it into bank, that means we are paying cash to the bank. Okay, so that we will record on payment side by writing by bank account, since bank is the receiver of that amount. Then on February 5th, purchased goods for cash, that means it is a cash transaction. We purchased goods and we made payment of cash rupees 30,000. So we will write by purchases account rupees 30,000. And you have to mention date as well. Okay, don't forget to mention date. The next is purchased goods. That means they have purchased goods. They haven't mentioned whether it is cash transaction or credit transaction. Since they haven't mentioned any name of the supplier also, of the customer, supplier, that means it is a cash transaction. So we will write by purchases account rupees 15,000. The next transaction is purchase goods from Suryakant. Now in here they have mentioned name of the supplier, that means it is a credit transaction. So we will skip this transaction, we will not record it in cash book. Then next is paid to Suryakant rupees 38,800, and then we have received discount of rupees 1,200. Now in this case we paid cash to Suryakant rupees 38,800. that means we have made payment. So we will write by Suryakant rupees 38,800, and we have seen that we will not record discount in our cash book. So for that discount received amount, what we will do is that we will pass journal entry by mentioning date February 12. Since Suryakant is the receiver, so we will debit his account, and discount received account is always credited. So amount is 1,200. So discount received from Suryakant. This is nothing but it is known as journal proper. Now journal proper is nothing but all these transactions which do not find its place in other subsidiary books, we will pass journal entries for them, and that is known as journal proper. The next is paid wages in cash. That means 22,500 of wages were paid in cash. That means we will record it in credit side by wages rupees 22,500. The next is paid to casual labor rupees 1,500. that means we paid in cash, so that also we will write by wages account rupees 1,500. The next is sold goods to Devraj for cash. Since they have clearly mentioned that this is sales and it is a cash transaction, that means we have received cash of rupees 80,000. So what we will do is that we will record it in debit side by writing to sales account rupees 80,000. Then next, paid electricity bill in cash. That means we have paid cash rupees 12,000. So we will record it in credit side by writing by electricity charges account rupees 12,000. Then next is withdrew cash from bank. Now when we withdraw cash from bank, that means bank is paying us the money and business is receiving cash. That means we will record it in debit side by writing to bank account rupees 40,000. Then next is received for cash sales. That means we sold goods for cash and we received cash. So that means we will record it in debit side by writing to sales account rupees 5,000. And last, paid for miscellaneous expenses. That means we paid for miscellaneous expenses in cash rupees 500. So we will record it in credit side by miscellaneous expenses account rupees 500. Now as you can see, all the transactions are completed. Now what we will do is that we will balance our cash book. Now you can do that roughly, or you can do, since it is the first question and for your better practice, what you will do is that you try to do in rough. Okay, first what you have to do is that you have to find out total of these 4 items. Then since we know that debit side, that is receipt sides, will be always greater, so you can write 3,25,000 in here. Then after that what you have to do is that you have to find out total of this amount, that is 1 2 3 4 5 6 7 8 transactions you have to find out total. Now after finding out total, it will be surely less than 3,25,000, but we have to balance the cash book. So what you will do is that the total of these 8 items, you will deduct it from 3,25,000, and the remaining balance figure will be nothing but your balance carried down. That you have to write in here. In this question we got 1,29,700, so this is our balance carried down. And remember, we balance the cash book on the last date of every month. Since this is 2019, so the February month, it will have only 28 days, so we wrote by balance carried down on February 28, 1,29,700. Now after this, you can see that the total of both the sides are equal, 3,25,000, 3,25,000, and remember, both the total amount should be in straight line. After that what you have to do is that you have to draw a double line, that is means showing we are closing the cash book for a particular month. And at the last, this carried down is nothing but it will become your brought down or opening balance for next month. Since after February we get March 1st, we'll write March 1 in here, and this by balance carried down will become to balance brought down rupees 1,29,700. Now finish. I hope this cash book is not that much complicated one, since this is single column cash book. So in our next session we will solve one more practical question of cash book, and we will move on to 2 column cash book or double column cash book. So you practice question number 1 and 2, and if you have any doubts, then you can contact me. And for this session we will wind up here. Thank you.